In this market analysis, popular crypto analysts Willy and PlanB provide their insights into the Bitcoin's current selling pressure. As Bitcoin's price volatility continues, mainstream media is quick to label the situation a crypto crash, causing panic among retail investors. Many traders are asking, why is the Bitcoin market down? Willy and PlanB have weighed in on these concerns, offering valuable perspectives. Let's start with Willy's analysis. Recently, Willy responded to a viral tweet discussing Bitcoin's long-term holders. The tweet highlighted significant selling activity. Bitcoin long-term holders have distributed $60 billion worth of supply in the last 30 days. Out of all the long-term holders, supply moved since the FTX bottom. 21% has happened in November. This is the heaviest profit-taking we've seen so far this cycle. Willy quickly replied with his interpretation and said, worth noting, long-term holder selling is confirmation of bull markets. They sell into every bull market. $70 billion of buys happened, of which $60 billion of BTC came from old hands. It's when short-term holders start selling as well that we enter consolidation. That part is undecided right now. Wu's response clarified that long-term holders taking profits is typical in bull markets. The real concern arises when short-term holders join the selling spree, potentially leading to a price consolidation phase. The tweet sparked mixed reactions. One user expressed frustration and said, I don't understand what those hands are thinking at the beginning of a bull market. Clearly, someone's selling, or we'd already be past $100,000 with the supply squeeze. Wu responded with a humorous analogy to put the numbers into perspective. Imagine having $0.96 trillion worth of Bitcoin, the amount held by long-term holders, excluding Satoshi's coins and lost coins. Selling $0.06 trillion in a month is like having $100,000 in the bank and selling $60 to buy coffee. In other words, the selling activity may seem significant in absolute terms, but it's relatively small compared to the total value held by long-term holders. Another user questioned the definition of long-term, pointing out that holding Bitcoin for over 155 days doesn't feel long-term to them. Wu responded to his response and said, 155 days is the point where a significant change in behavior happens. However, in this analysis, the recent long-term holders activity is a minimal part of where the real capital and selling pressure is coming from. This clarification suggests that while the 155-day threshold is a standard metric, the focus should be on broader market dynamics driving selling pressure. PlanB also shared his thoughts on the situation, identifying profit-taking as a key factor behind the selling. PlanB tweeted and said, "Who sells Bitcoin now? Easy. Sellers are profit takers. On average, November sellers sold at more than 60% profit, with a cost price of $55,000. I guess people expect a dip at $100,000 and are front-running that expected dip. This might mean there won't be a $100,000 dip. In simple terms, PlanB believes many investors are taking profits because they anticipate a dip around the $100,000 mark. Ironically, this behavior might prevent the expected dip from happening altogether. Willy added his perspective to PlanB's observation and said, 100% of OGs who bought at $1 to $1,000 sell during every bull market. This is visible on-chain. However, the current setup for buy the dip is driven by tactical games between speculative positions. There's a lot of money to be made by pushing the price down to liquidate recent paper longs. Wu highlights the strategic nature of the market. While long-term holders profit during bull markets, Speculative traders play games to capitalize on price movements, potentially causing sharp drops to trigger liquidations. Since MicroStrategy recently bought $5.5 billion worth of Bitcoin, another follower responded and asked, "How does a $5 billion buy not move the price?" Willy quickly replied, explaining, "When purchasing such a large amount, buyers aim to avoid moving the market. Once the buying ends, it's up to others to jump in and push the price up. In this case, there was a 100K sell wall, meaning sellers at the $100,000 level were ready to offload, acting as a barrier to price increases. The $100,000 mark is a psychological resistance level where many investors choose to sell." If you found this analysis helpful, be sure to subscribe for daily updates and insights from top crypto experts. Your support helps us continue delivering valuable content. Thanks for watching.